Welcome to the Wednesday edition of Tech Stocks Daily. Get ready for a ride through the tech universe as we unravel Oracle's sky-high cloud earnings, Microsoft's gaming and AI escapades, and Meta's bold AI-infused advertising ambitions. Oracle's 52% cloud revenue leap will have heads turning in the finance realm, while Microsoft is electrifying the gaming scene with PCs and new Xbox handhelds. Meanwhile, Meta is navigating stock hiccups, but banking on AI to supercharge its ad empire by 2026. Whether you're a market mogul or a tech enthusiast, there's something for everyone. So stick around as we dive headfirst into today's hottest tech stock stories. Oracle has been making quite the splash in the tech world today, and it's all thanks to their blockbuster fourth quarter earnings report. This tech giant is sitting pretty on the cloud, literally. Oracle reported a staggering 52% increase in cloud infrastructure revenue for the fourth quarter of fiscal 2025, raking in a cool $3 billion. Talk about living in the clouds and watching your bank account soar. But that's not all, folks. Oracle announced some thrilling projections, anticipating even more growth with cloud infrastructure revenue expected to skyrocket by over 70% in fiscal 2026. Now, the magic sauce for Oracle's success appears to be their strategic investments in data centers, coupled with their rapidly expanding role in the AI infrastructure segment. Companies in the AI industry are flocking to Oracle, desperate for computing capacity as the AI boom blossoms faster than you can say machine learning. Oracle's been building data centers faster than many of us can type the cloud, with plans to open 47 more centers over the next year. Currently, they're already operating with 23 of these centers, making it clear they mean business, cloud computing business, that is. Adding to the cloud frenzy, Oracle's multi-cloud database revenue from third-party providers like Amazon, Google, and Azure more than doubled in comparison to the previous quarter. This phenomenal growth paved the way to what Oracle sees as triple-digit growth in this sector for fiscal 2026. CEO Safra Catz confidently proclaimed fiscal 2025 as a good year, but the expectation for fiscal 2026 is even higher as Oracle forecasts dramatic revenue jumps. And let's not forget Oracle Cloud at Customer, their cloud tech that customers can run inside their own data centers. The revenue from this nifty feature grew a whopping 104% year over year. The demand for custom-tailored cloud solutions seems to be as hot as a new gaming console release. Financially, Oracle isn't just up in the air. They're grounded with solid earnings. They zipped past analyst expectations with a reported fourth quarter $15.9 billion revenue, exceeding the forecasted $15.58 billion. Adjusted earnings per share clocked in at $1.70. Yep, they overachieved once again. Thanks to these rosy numbers and promising future forecasts, shares of Oracle shot up around 7% in after-hours trading. The cherry on top, Oracle's board declared a quarterly cash dividend of 50 cents per share. To put that into investor-centric perspective, with a dividend yield of 1.13%, you could potentially rake in $500 a month, given a sizable investment. Proof that playing the long game can truly pay dividends. All in all, Oracle's innovation and strategic moves in cloud and AI point toward an exhilarating fiscal year ahead, keeping investors and tech enthusiasts eagerly watching as they continue to grow. In this race to the top of the Cloud Infrastructure Summit, Oracle looks ready to soar higher than ever before. Buckle up, because this ride is far from over. All right, tech enthusiasts, buckle up, because today's dive into the world of Microsoft is absolutely packed with juicy details. Starting off, Microsoft remains a titan in the tech industry, thanks largely to its relentless innovation and strategic maneuvers. In multiple news pieces today, Microsoft is making waves for its impressive performance in both the software and gaming industries, as well as its strategic positioning amidst the AI cloud evolution. Let's dissect what's really bubbling in Redmond's cauldron of tech wizardry. Microsoft is increasingly flexing its muscles in the software arena. On the financial front, even though its price-to-earnings and price-to-book ratios suggest potential undervaluation compared to its peers, Microsoft's return on equity is marginally underwhelming. However, their earnings before interest, taxes, depreciation, and amortization and gross profit figures are soaring above industry averages, showcasing standout profitability. What does this mean for investors? It's like finding a high-performance supercar somehow priced lower than you'd expect. Drive fast, my friends. Now, moving to the gaming sphere, Microsoft is not just sitting back, but racing ahead. Xbox continues to gain traction, contributing significantly to Microsoft's total revenues. With a staggering 45% increase in PC Game Pass revenues and an impressive 150 million cloud gaming hours logged, integration with AI is clearly powering its ascent. They've rolled out sweet new features like the Copilot for gaming, designed to elevate gamers' experiences with real-time support and AI-driven gameplay creation. And let's not forget the announcement of new Xbox handheld devices in collaboration with Asus, set to delight handheld fans next holiday season. But that's just the Pixel side of the story. On the AI cloud front, Microsoft is surfing a massive technology wave that's reshaping the digital seascape. The partnership with OpenAI has fortified Microsoft's stature, embedding GPT-4-powered features into its ecosystem. You know, those slick Copilot tools and Office applications that make work feel more like a breeze than a storm? Yeah, those. Here's the real kicker. Azure is living its best life, with the Intelligent Cloud division posting a 21% revenue growth. It's like waves on a beach, just rolling in one after another. By being just as potent in non-AI services like databases and storage, Azure is positioning itself as a go-to cloud service provider. Microsoft isn't just about business strategy, though. They're charting the waters of digital transformation in earnest pursuit. The momentum is insane as their stock rockets upward, having seen close to a 12.6% rise in 2025 alone. It's an investor's carnival out there. In essence, Microsoft is orchestrating a symphonic blend of strategy, technology, and evolution. Today's news shows a company that's not just riding the tech wave, it's leading it. Although facing stern competition, Microsoft appears locked and loaded for sustained growth. So, whether you're a stock market hawk or a gaming aficionado, keep your eyes peeled on Microsoft. They're cooking up some serious magic. All right, everybody, let's dive into why everyone's favorite social media behemoth, Meta Platforms, is making some headlines today. And spoiler alert, it's a tale of earnings, valuation, and of course, AI wizardry. First up, the stock market drama. Meta Platforms saw its shares swipe left to close at $694.14, marking a drop of 1.18%, which was a bit more heartfelt than the overall market's 0.27% loss. While it's been a rocky session, take heart. Meta's still enjoyed a 7.07% appreciation over the past month, although it slightly underperformed when stacked against the computer and technology sector's glamorous gain of 11.99%. Add that to the company outperforming the S&P 500's gain of 6.9%, and you've got yourself a cocktail of mixed feelings. Next up, they're making waves with future earnings data that's arming investors with both jitters and a sense of hope. Analysts and investors are on high alert for Meta's upcoming earnings' nerve-wracking reveal. Word on the financial street suggests they'll announce an EPS of $5.83, up 12.98% from last year's bedtime story, and projected quarterly revenue hitting a whopping $44.26 billion. Let's talk full-year figures. We're looking at expected earnings of $25.53 per share and revenue that'll set industry tongues wagging at $185.52 billion. Now for the whiz-bang stuff. Meta is fixating on Cinderella transformation through artificial intelligence, eyeing a rollout by 2026. Imagine AI doing the advertising grunt work, fine-tuning images, drafting text, swiping right on the ideal target audience, and maybe even messaging them all, powered by the behemoth's mass daily user base, clocked at 3.43 billion across platforms. We all know a drool-worthy prospect when we see one. If Meta rolls the playbook right, its AI-driven ad operations could appeal so broadly that advertisers might feel like they found the holy grail for cutting costs while clocking in impressive results. It's music to any investor's ears, particularly when this area already equals the secret sauce of Meta's financial success party. But hold your snoozes, there's a pinch of intrigue and uncertainty woven in. U.S. China trade tensions are not exactly throwing confetti on Meta's parade, thanks to changes in import tax laws damping revenue streams from Asia-based ads. Despite this hiccup hitting the revenue segment, Meta showcased first-quarter results that sang, registering a 16% lift in revenue, with net earnings taking a handsome 37% lap ahead of last year. There it is. Meta's grabbing website headlines today with intriguing bold steps in AI efforts, while still grappling perhaps with awkward dance moves in stock prices. Time for you guys to jump in. Do you think Meta's AI gamble will pay off? What's your take on their trajectory as America's digital darling? Comment down below and let's keep the conversation going. After all, your voice is what makes this community buzz. All right, folks, let's zero in on Oracle today, given their jaw-dropping performance. Imagine this. Oracle's living on Cloud 9 with a 52% increase in cloud infrastructure revenue that's got Wall Street grinning from ear to ear. Oracle is pouring money like a fountain into data centers and dominating the AI infrastructure sector. They're in the middle of a cloud and AI adoption frenzy that's about as exciting as a roller coaster ride at a theme park. With Oracle forecasting even more explosive growth, they're predicting a 70% revenue spike for fiscal 2026. So what does that mean for potential investors or current shareholders? Based on these sparkling numbers and projections, Oracle feels like it's rocketing to never-before-seen heights with its cloud and AI initiatives. They've also got big plans to expand their data centers globally and innovative tech solutions like Oracle Cloud at Customer that are clearly resonating with clients. With their stock popping 7% in after-hours trading and a sweet declared cash dividend of 50 cents per share, Oracle shows hardiness both in growth potential and income. This is the kind of scenario that could urge someone to consider hitting the buy button or at least hold. Strong on any existing shares if you believe this momentum can be sustained. But hey, remember the investor golden rule. Perform due diligence and snoop around for more intel before making any financial decisions. Markets can be unpredictable, and it's always better when your decisions are informed and not influenced by the whim of the moment. That's my take on Oracle, looking skyward with a powerful tailwind. How about you? Ready to strap in for Oracle's next skyrocketing growth phase? Always exciting times in the tech realm, right? What a whirlwind day on the tech front. Oracle is soaring to new heights with its stellar cloud revenue performance. Microsoft's striding ahead with gaming innovations and AI integration. And Meta, amidst a bit of rockiness, is pushing forward with ambitious AI plans across its colossal user base. It's clear that each of these companies is playing a unique hand in this high-stakes tech game. If you enjoyed today's roundup and want to stay ahead of the game, make sure to like, subscribe, and share this video with your fellow tech enthusiasts. After all, who doesn't love a good headline? Some more zesty tech news awaits tomorrow, so come on back to join me for another wild ride through the world of tech. See you then.